Welcome to the Ag Commodity Corner Plus podcast. It is November 14th, 2025, week number 34. Our title today is USDA pulls the rug underneath farmers plus the chaos in cattle. Let's get right into it. I don't want to waste too much of your time. You can see this week, I did highlight the grains, particularly corn, oats, beans, meal. Why? Because we still actually closed higher for the week from last week's close. So, it could have been a lot worse. We'll get into the USDA report. Cattle, it could have been a lot worse there too. In fact, feeders actually closed up on the week compared to the close from last week. And I don't know what's going on with Bitcoin. That should be a negative red 9,000, but breaking below 100,000. We were concerned about that. There's a double top. I think we could go to 80,000, but there's some risk off going on in Bitcoin. So let's get into this highly anticipated November USDA crop report. What a disappointment.
Yes, Mo. So today we got the November WASDE finally after October when we did not get a report, but it was disappointing. As far as the numbers there, the big one, corn yield came in at 186, which is just slightly lower than where they were at in September and higher than what the trade was expecting at 184. Among the surprises, Iowa was down only by 3 bushels per acre after what we've been reporting about disease pressure. Illinois was up by about 2 bushels per acre. Indiana up by 1. Big jumps in South Dakota and Kansas after a strong finish to the growing season. But a lot of surprises more in that report.
Yeah, we were very concerned about this report because we thought that the USDA didn't have the personnel. If you go back to 2018-19, it took them a while to catch up. I don't understand why they were in a rush to release something. We were doing quite fine without you, to be honest with you. So I don't know why they just didn't wait. They really don't have a lot of the demand data. They got to wait for that December 1 quarterly grain stocks report. It was one big disappointment, unfortunately, but take it with a grain of salt. This is what the USDA said. Due to a lapse in government funding from October 1st through November 12th, some of the USDA sources that are typically used were not available for the November 25 WASDE. My big question is, did we lose that October plot data where the USDA goes into their plots and weighs the corn and the soybean pods? They harvest those plots. I don't know if we're ever going to know, to be honest with you. We've been talking about this disease pressure, not only us, but others. We talked about the dry finish, and yet this is what we get today. So I felt that we would have to wait for the January crop report to get the real story. But this report was neutral, bearish corn, beans, and very bearish wheat.
A big surprise there in that wheat number, 271.43, sharply higher than where we were at in September, 264, and expected was 266.
Yeah, and the U.S. ending stocks numbers at 900. I'm sorry, folks. I know we saw a bottom. I honestly think unless that demand, and we'll talk about it later in the podcast, but unless demand is much stronger to offset this extra production, I think we're going to retest those lows in wheat.
On the South American side of things, a few changes there. So Brazilian corn up by 1 million metric ton to 136. Soybeans on the Brazilian side, this is for the older crop, up to 171.5 versus 169 prior. For the new crop, Brazil largely unchanged on corn and soybeans. When it comes to Argentina, they made edits to the Argentine soybean 24-25, raised to 51.11 versus September at 50.9. No changes to the new crop. So on the whole, a bigger old crop, it seems like.
Yeah, it's too early to really worry about South America. We still got lots of time there. But unfortunately, this report was a bear. I'm calling it as it is, but what it does do is it really takes the air out of that technical bullish momentum we had. unfortunately. So now we're going to have to buy more time.
Not only did we get the WASDE demo, we got a data dump of sales, export sales from the US. In the USDA daily flash sales data dump today, US soybean export sales, to note, included 2 sales to China, totaling 332,000 tons, and 2 sales to unknown, totaling 355,000 tons. So known to China so far is 332, with a max possible to China, possibly to 687,000 tons. More are possible in weekly sales reports that start on the 20th, it seems, next Thursday. So 3.3 million tons for corn during this time could be in line.
Anything below 3 million metric tons, and it was bearish. We did not get 3 million metric tons. So there's 2 schools of thought. Are we running out of time? Is China actually going to buy? This past week, there was a lot of talk that China wasn't buying the physical, but rather going long futures. And my big question is, and they've never done that, so they could eventually transfer those futures into physical. But why would China not be buying under the radar while beans were 10 instead of 11 or 11.50? I mean, none of this makes any sense. So we'll have to wait and see whether we get some positive news next week in the weekly export report. And then, of course, those reports in 2018-19, the USDA dumped all these reports on us in one day. For some reason, this time around, again, another sign that they probably don't have the personnel to do this. That's why they're taking their time. And they'll update the weekly U.S. export reports by January 8th. So maybe, finally, by the January 12th crop report, we might be up to date with demand, maybe the supply side, all that fun stuff. So unfortunately, we're going to have to buy more time. And, Ash, it looks like I don't know if the damage is done yet, but one day or 1 week doesn't make a trend.
Like you said, some of that short-term momentum seems to have evaporated from these grains markets. So after the report released today, December corn was down 11 cents to close at 4.3. December Chicago wheat, this is soybeans. Jan soybeans down 22.5 cents to 11.245. December Chicago wheat off 8.5 cents to 5.2725.
It's going to be a struggle for the wheat market to break above that 200 now with this report out of the way. But if we go back to the beans, if you guys don't want to buy 2 months worth, what have I said in the past? When you're trading well above the 200, the funds are long, and I don't know if they're long, but I think they are. Maybe you take some risk off the table, because 2 months can do a lot of damage to charts depending on the headline news. So let's talk about, and then there's our report. This week we were talking about all the technicals ahead of these reports, so the pre and post USDA game plan. So check that out. I think we made the right decisions for our clients. We were also talking about feed for livestock. So this report gives livestock producers a little bit of a break on feed, but don't remain too complacent there.
Let's talk trade deal. The U.S. said yesterday that it will remove tariffs on some foods and other imports from Argentina, Ecuador, El Salvador, and Guatemala under framework agreements that will give U.S. firms greater access to those markets. The agreements are expected to help lower prices for coffee, bananas, and other foodstuffs, including U.S. beef.
Yeah, this headline news was just the same old noise that Trump wants to reduce some of the prices in the U.S. from beef to now coffee and bananas. I'm not sure coffee and bananas is that expensive, but if you're a fan of coffee, then I guess you want a lower price. So it kept the funds on a defensive, particularly in cattle. And unfortunately, we did close lower again. But I think maybe the 200-day moving average could act as support moving forward.
So the weekly close below 227.3 is a secondary technical sell signal. For December live cattle, that is trying to bounce from the 200-day moving average at 215.68, but a break lower sets up $200 as 205.55 low by year end. Jan 2026 feeder cattle is bouncing from 308.275. Lower targets come in at 277.45.
I think we're at the tail end of this plunge. Why? Because at some point, now that the USDA is reopened, you're going to get those monthly cattle on feed reports. The next one's December 21st. I know that's a ways away, but what's that report going to show you? We have tight supplies again. So the packers have the edge right now because cash is falling, futures are falling. They probably have enough supply that they can get through here short term, but I think all of this will be short-lived.
Let's talk about the stock market. A sharp sell-off in technology stocks and shockwaves through the North American markets as investors question whether the AI rally has pushed valuations too far and grew increasingly uncertain. And they basically grew increasingly uncertain about the path of interest rates.
Yeah, so I think investors got a little concerned from some noise that AI valuations got ahead of themselves. But remember, we've talked about this a million times. You get 4%, 5% corrections every 4 months. There's your correction. Remember, NVIDIA reports third quarter earnings next Wednesday. Many think they're going to beat and raise. Remember that Ginseng, the CEO, told TSMC, their manufacturer of their chips in Taiwan, to increase production by 50% because that's how strong their demand is. So, is the AI bubble bursting? I doubt it. I think this is still early innings. The stock did hit a low of 180 on NVIDIA here because of that AI valuation issue, but I would not be surprised if next week it's the pillar of the stock market and it's trading much higher.
From one of the big boys in AI, NVIDIA, to the other one. So AMD had its financial analyst day in New York this week, and the last time that happened was 3 years ago. And the company underscored a clear message that the AI era isn't just expanding the demand for computing, it's redefining it. AMD expects AI spending on data centers by 2030 to top $1 trillion. And this is up from their prior projection of $500 billion.
Yeah, this is incredible. I'm not surprised that they're saying that. We do have a new challenger to NVIDIA, GPU chips. There's also this concern that these hyperscalers are applying a depreciation on these GPUs that are 6 to 7 years long instead of 2 to 3 years. But investors don't understand that NVIDIA created a new product that extends the life of an H100 chip. And so that's why they're allowed to do that. So I think it's a lot of noise, but this could be the second pillar to the stock market moving forward. I think AMD still has to execute and still has to prove the market wrong, but I think the market is getting more and more convinced that they could become the next big player in AI chips.
Sticking with the broader stock market, big short investor Michael Burry has stepped up criticism of technology heavyweights, including NVIDIA and the AI space in general, in recent weeks, questioning the cloud infrastructure boom and accusing major providers of using aggressive accounting to inflate profits from their massive hardware investments. Like you said, NVIDIA reports third quarter earnings next Wednesday. Also, interestingly, Michael Burry has deregistered his hedge fund, Scion Asset Management. This guy is famous for his successful bets against the U.S. housing market in 2008.
Yeah, I mean, I think he's trying to get out of the AI bubble before it bursts, so he doesn't have to explain it to his clients that he lost a ton of money playing AI. But again, more noise. This is a buying opportunity. remember, play the long game.
Also, headline news from DTN on Nebraska. Despite USDA reporting Nebraska corn yield at 191 bushels per acre, DTN reported more evidence that cloudy, humid conditions lowered solar radiation in the state, resulting in corn yields down by as much as 25% more.
That's why this report to me is just
Bogus.
yeah, you just can't believe the numbers, because how can Nebraska be 191? Now, it's a particular county, and there's lots of counties in Nebraska, but nonetheless, it just shows you that I don't think the USDA was using the right data. So again, we're going to have to punt, and unfortunately, we're going to have to give it a couple months.
Headline news about a trade framework with Switzerland and India. The Trump administration announced a Switzerland trade deal that will bring manufacturing back to the U.S. and that India will buy more U.S. wheat. India has not been buying U.S. wheat for over 3 years now.
Yeah, I think Switzerland's just a small country. I don't know if it's going to really move the needle much, but everything helps in wheat. As I said, we're going to need that wheat demand to offset that 900 billion in ending stocks. So it better show up soon. And then finally,
this is concerning. The drought in Iran, which has been going on for 6 consecutive years, is taking its toll and may force millions to evacuate. The country is grappling with its worst water crisis in decades, with officials warning that Tehran, which is the capital and houses over 10 million people, may soon be uninhabitable if the drought gripping the country continues.
yeah,
The president has cautioned that if rainfall does not arrive by December, government must start rationing water in Tehran.
God bless them all. I don't know. The government dropped the ball on this one. They should have been doing something about this. Waiting 6 years for rain to happen. I hate to say it, but North America is not in any better shape. Maybe this is what we have in store for next year. Remember the 89-year drought cycle. When I studied the 89-year drought cycle, it was not just a drought in North America or the United States. It impacted the globe. So this could be part of that. Until next week, thanks for watching. Really appreciate it. Don't forget to subscribe. Take care. Have a great weekend.